Good morning and welcome back to Almus Market Mornings. Tensions in the Middle East have once again flared up after US and Iran have exchanged gunfires and a few Iranian drones hit UAE's Fujairah port. This has, of course, put at risk the 4-week-old ceasefire agreement that was in place. Oil prices have moved higher after this particular update. Domestically, the state election results are out. The BJP had quite the resounding victory in West Bengal, while in Tamil Nadu, the actor turned politician Vijay had a strong showing. Good morning, JK. What are your thoughts on these particular developments?
Good morning, Swaraj. I think geopolitics has once again received started to receive more attention now. Market had somewhat relaxed after an indefinite ceasefire was announced by US, and then there was no action for some time. But then, since yesterday, tensions have continued. If you remember, 2 3 days back, President announced the Project Freedom that would ensure and guide ships and tankers through the strait. In fact, Treasury Secretary also had said yesterday that the US is opening up the strait for ships to sail through, but the reality was different. And actually, the firing at Korean cargo ship by the Iranian forces was a major setback and resulted in fresh tensions arising. And in fact, even the US claimed that they had shot down many of the smaller boats of Iran, and this actually led to fresh tensions. And it's not clear, whether there will be further progress in peace talks in the near future. Additionally, Iran also struck, as you said, the critical Fujairah oil export terminal, and in fact, there is one casualty is also reported, as well as oil tank on fire have appeared as well. Fujairah is a key export facility for UAE, and it allows them to bypass the Strait of Hormuz and continue export of larger volumes of oil as well. So you can say. The war has restarted, but the scale is lower and confined to key sea routes now. And even as the clock is ticking for both sides to come to a permanent end to the war, it can either come down or it can even flare up. Both possibilities are there because it's not easy for either side, or both sides are not really uh, easily amenable to come down in their demands. In fact, one strong statement from Iran foreign minister says the Project Freedom is now a project deadlock. So that's some summation of what is happening right now. So we had negative reactions from markets, bonds. We saw strains visible. 30-year yield crossed 5.02. That was the highest close seen since May 2025. Yields were also higher at other regions. Stocks also reacted quite negatively after the attack on Korean ship, and oil prices rose 5%. S&P 500 hit a new all-time high, again reversed. Markets is also seeing, the Berkshire Hathaway's statement in their annual meeting that they were net seller of stocks the fourth consecutive year, and investors closely watch this statement from this conglomerate, often viewed as a bellwether of U.S. economy. So right now, markets seem to be feeling a bit perky in the evaluation, so we might see some corrections. But of course, if there is a relief in the Gulf War, we can, see another relief rally. But I think valuation concerns are more and more, on the radar for the markets. Now, US dollar also rose against the euro as the tensions rose again. Dollar index came back to 98.50. Dollar yen had another round of intervention from the Bank of Japan, but again, it did not make new corrective low. Last time they intervened, it was at 95.50 low, and this time it did not go below 96 as well. Now it again trading above 97. The tensions in Iranian war, as well as the oil price hike, is not really helping the Bank of Japan to achieve greater success in their intervention, because market continues to buy the dollar on dips, particularly against the yen, because in Japanese economy is quite negatively affected by the rise in oil prices. This week, of course, is a very important week for US economy, because we have a lot of employment indicators starting today. The JOLTS data today, tomorrow we have the ADP numbers, and then Challenger job cuts. Finally, the Friday non-farm payroll report. This coming just before the first meeting of FOMC, where Kevin Warsh is likely to be chairing, is also significant from the market's point of view. How a softer number will be viewed. Overall, on the jobs market, what we have seen is that the employment situation has softened, but it is not really, crumbled, and so it has settled at a slightly lower level compared to what we have seen in the last 2 years, but definitely not, crashed. So that can be some. Some support for the hold for the Fed to hold off any early rate cuts, even if the inflation is settling at these levels. But that's the big question: where the inflation is going to settle down is now the big question, particularly if the Iran-US war continues. On the rupee, again, we had a new all-time high at 95.09. Market seems to be, headed towards a new all-time high as well, because once again, the demand is quite persistent. There were a lot of NDF maturities, which was creating more demand for the market, and obviously the supplies were only from the state-run banks, and no real supplies from either inflows or exporters that was seen. And this situation is likely to continue. Of course, there have been some reports indicating that the central bank is studying ways to mobilize dollar inflows and boost its foreign exchange buffers. However, how effective it will be and how fast this will come is something that we need to keep speculating. In the meantime, the rupee will definitely be on the weaker side unless we have a major relief from the war side as well. Yeah, the election results, of course, I don't think it has much of an impact as far as the markets are concerned, particularly for the currency. I think we are more looking at the state of the capital flows as well as the global geopolitical situation. Thank you.
Thank you, JK. And yeah, so geopolitics back at the center stage. Yeah, after a relaxing period for markets after an indefinite ceasefire, tensions have once again resumed. Few firings at Korean cargo ship by Iranian forces. It has resulted in a setback. US has also claimed it shot down many of the small attack boats of Iran. Of course, how all of this would result in further peace talks, which are now significantly at risk. Even though the scale of war is lower, oil prices are higher. They rose by 5%, and they continue to be elevated. That's the, I think, major cause of concern for markets. Yields are significantly going higher. 30-year is above 30, US 30-year bond yield is above 5%. And a similar kind of trend can be seen in most economies, because there is a risk of inflation shooting up. Dollar index has gained. It is back at 98 and a half. This week, we have a few employment data from the US, ending with NFP on Friday. And domestically, rupee story, it remains unchanged. Dollar demand remains strong on dips. Flows is a cause of concern, and there are also some reports the central bank is evaluating ways to improve dollar inflows. But how effective it will be needs to be seen. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.